Now that we've done the US, looked abroad, now we're going to turn towards what's happening in Europe and what some European data points are pointing to now that we've seen an extension of lockdowns, as we talked about in the EAA show. Italy, Italy, France, Germany have seen an increase in COVID cases, resulting in some form of additional lockdowns. Netherlands, Belgium, all of them are seeing some sort of extension, whether that be 3 weeks, 6 weeks. You're seeing this push out in terms of just opportunities and activities. And before we get into that in more detail, this I thought was really interesting when you look at savings in the Euro area accrued to older, wealthier. So this is a similar backdrop to what we've talked about in the US, just on in the European theater. The financial situation, because as I wrote in one of my blog posts, we've continued to see pressure on furloughs. So Italy, for an example, has gone from about 188 million hours of people paid to do nothing to 1.4 billion hours of people paid to do nothing. Now, you're not going to pay them the full amount to do nothing, but you're going to pay them to do nothing because you're trying to protect against social unrest. So if you just look at where that pain resides, 64 and younger, your current savings might be getting a little bit better, but your financial situation is getting significantly worse, and the savings are not accruing against that. And that's a dichotomy and a dynamic that I don't think is understood in terms of what does that mean for growth? What does that mean for the future movement of activity, which again leads to some of those bigger issues that we continue to see, not only just in the US and in Asia, but also in Europe, as I've written about what comes next after the pandemic, which is the bigger issue in general. So then when we start looking at some of the European Union data and some of the data points that have come out over the last couple of weeks, so PPI, as we keep talking about, is pushing higher now year over year in Finland and some of these other areas. We're talking 2%. Then when we look at some of the things that we want to talk about right now is France. So when we look at France, the PMI for March, 56.3 is estimate, 58.8. Services getting better. Still not growing, but just kind of holding flat at 49.5. Germany, on the other hand, 66.6. Services, 50.8. Comp, 56.8. So clearly there is a positive move. How much will the new lockdown kind of hamper some of that growth? And how much of that is being driven by delays in shipments, cost in shipments? And the answer is a large amount. Not a concerning amount yet, or I shouldn't say not an amount that's filtered through all the way, as we still have PPIs coming out, which have continued to rise higher. These are things that will keep getting worse over time as the PPIs will come out on the 24th, the 26th, and we'll talk about them when they issue. Then when we look at the Eurozone manufacturing at 62.4, services 48.8, Eurozone composite at 52.5. So we're still growing, and we're back to growing. We're back to a growth profile. It's just now this was on a better February, March improving, now March getting a bit worse. And the question is how much of this will pull back. So I don't think we get a huge pullback, but I think we come back below 50. And if we're not below 50, it's because you go through the different components of it, prices and lead times continue to get worse. And as we showed earlier with just the cost of going from Asia to Europe, those expenses are only going in one direction and remaining elevated, which will continue to get pushed through the system, which even when you look at Eurozone, when you look at consumer confidence, that is another one that continues to be problematic when we're looking at the Eurozone, because while the survey was at negative 14.5, it still came in at negative 10.8. And now that we get an increase in COVID, that typically starts to impact. So it's still negative. It's just, it'll most likely be closer to that negative 14.5 as we go forward, which is going to hinder some of that new activity, some of the growth in just what is being done, what do the movements look like in general. So then when you look at the inflation rate for Feb, you can see that the EU is at 1.3%, Euro area at 0.9%. So the shift is going in that upward trajectory, which the PMI is picking up, which PPI is picking up, which CPI is picking up. And now as you get more easing in general, that's going to only continue that inflation rate as the ECB said they're going to do more. Italy has said, or Draghi has said, we're going to do as much as humanly possible. And you get a renewed push of new stimulus, especially as you get some of these COVID cases and new restrictions expanding in the European theater. Then when you look at just the standard labor market measures, so this is what we've been talking about. So hours worked and employment. So the hours worked has been the net issue because you get people who are getting paid to do nothing. You're getting these numbers that look better than they really are, which is speaking to why there's going to be that kind of the delay as we look through the European components. Then when we look at the Bundesbank and the weekly economic activity, you can see that right now we're back below that pre-pandemic level. So we got this big weekly activity index. We got this big surge. Now we're back down. And that's why when we look at what do we see as we close out March and as we head into not only April into May, it's going to be difficult to get some of this growth back, especially when we look at trade, when we look at supply chain issues, commodity growth, and just where does Europe get a lot of its goods? Well, Germany. If they're not moving, then Germany's not moving products. And this is this continuation of problems that are reverberating through the system. So then when we look at the truck tolling side, so Germany daily truck toll mileage index continues to be fairly strong. So when we look at January, when we look at February, now March to date. So you had a February pushback and now March is better because they're trying to close the gap based on what PMI is picking up of is just supply chain issues. But as you get more of those lockdowns, those issues will get worse. But even still, you're still seeing a very strong activity front when you're looking at the toll mileage. So it's really the consumer who isn't really driving as much as trucks are still trying to close the gap on the supply chain. So then when we look at just total assets of the Euro system in billions, so this is when we're looking at just the expansion of the ECB and what is really driving that. So here you can see securities of Euro area residents denominated in Euro, other assets. So total assets in the Euro system just continue to drive higher and now, almost at 7 trillion euro. And you're just looking at how is this going to get managed? How is this going to move through? And this leads to, again, conversations about inflation, conversations about activity as we see COVID restrictions increasing again. So as we expected and as we've seen, the ECB PEPP weekly pace of purchases has increased. Shocker. Because people wanted it to increase to try to protect yield. So here, and even with the protection in yields, we've still seen an increase in general yield across the European theater, Germany, Italy, Spain. Russia's had their issues. Turkey is obviously coming through. That's impacting. So they've stepped up their purchases in order to kind of close that gap and be supportive of yields. And when we break it back into the PSPP net weekly purchases and the PEPP net weekly purchases, you get an idea of what is the real driver. And it's really been an increase in both because they're trying to do as much as possible to mitigate against yield increases, but also now what they're going to have to deal with an increase in lockdowns. And to be clear, they can say they're going to lock down, but anybody who's watching the news knows that there's been riots, there's been protests, there's been things. Merkel had to walk back some of her restrictions because people are tired. They're tired of these restrictions. They're tired of these issues. But even if you're tired of not moving around your own country, are you willing to go to another country? Are you willing to go to a different location? And that's where we start getting into tourism. And if you think back to the original slide that kicked off this segment, we've seen a big drop in that's 16 to 29-year-olds. Well, how many of them are tour directors? How many of them work at tourist spots? And without the movement in tourism, not only just internationally, but locally, that's going to continue to be a hindrance. So even though people want to move around more within their country, they're still not willing to go abroad or into other countries. So again, mitigating some of the issues, mitigating some of the recovery. So we're not going to get this huge drop off in gasoline demand, diesel demand. We're just not going to get any real support, and it'll just kind of drift lower. And that's what we have to watch to see what is the economic fallout going to be as we go through April and into May. And then how are things looking as we go into the summer months? Because we still remain concerned on international travel, movements abroad, which is going to limit the amount of just real GDP growth that we expect to see in this region.